Well, hello everyone, and welcome back to another episode of Wilson Weekly. We've got the fantastic Dr. Andrew Wilson again. He's going to share some valuable insights into the Australian housing market. Doc, how you doing, mate?
Yeah, good. I hope we've all recovered from the Melbourne Cup yesterday. I'm down in Melbourne at the moment, and it was an absolutely glorious day. Couldn't have had a better day weather-wise. I didn't actually get to see it, so don't know whether they'll kick me out of the state. But I just got snowed under with work. But yeah, Melbourne Cup's behind us. So guess what's coming next? And it's called Christmas, and that's just about a little bit over a month away. And of course, that means we've only got about 4 weekends left, or 4 weeks left for the housing market when we all close down for a well-deserved break. Well, most of us closed down over the Christmas period into January, but of course, some markets still are active, particularly that Southern Queensland market. The Gold Coast market is really active through January. No surprise, because it is, shall we call it, Australia's playground. And but up until then, we're going to have the usual, swelling of listings that we get towards the end of the year. This is now the final stage of the spring selling season. We have 3 stages of the spring selling season. The first one goes up till the AFL finals and the New South Wales public holiday, and that's the end of September. Then we move to the second phase, which has just ended. That goes up to the Melbourne Cup period, and then we have our final phase. And it's interesting because, as I said, usually that final phase is characterised by higher levels of supply versus demand, where it's a bit the reverse over the first period, where it's more about lower levels of supply and higher levels of demand. So what happens, of course, the law of supply and demand, we typically see lower clearance rates through the back end of the spring selling season. The reason for that, more listings. A lot of buyers have, bought, so we've got fewer buyers. And sellers become a little bit more motivated, obviously, to clear their properties before the end of the year, given that we do have that lengthy shutdown. So that's what we're looking forward to over the next month. We've seen some early signs of that over the past week or two with our auction results, and we'll have a look at that at the end of the show. But I think this is number 103 of podcast. So thanks, everybody, for keeping us going. And hopefully you've all been well informed as to the state of our housing markets. That is our plan, to do that on a weekly basis. And we've got a lot of interesting information today, not just the latest auction results, but we, as is synonymous with the Melbourne Cup, we have the Reserve Bank traditional Melbourne Cup meeting, which we had yesterday. So we can see what's happening with interest rates. So we'll discuss that. And we had the latest building approval data, which is important because we know that we need more housing in this country to try to get a bit more balance between supply and demand. So shall we get started and review all our data? So let's await the screen and our slide deck. There we go. So My Housing Market is my brand. We act as independent housing market accommodators and data providers. We're good friends with Infinity, of course, which we bring this podcast in conjunction with every week. And we also provide other market insights and commentary for the Infinity Group. And our mantra is current state and future prospects of your housing market. And our week-to-week podcast really does reflect that we're on about the current state, so you can make your decisions out there in terms of property, knowing exactly what's happening as close to here and now as possible. So it is the week ending Wednesday, November the 6th, day after the Melbourne Cup, as we've said, and really it's a real slide from here down to Christmas, which will be here before you know it. So start thinking about those presents you're going to buy and thinking about what you want to receive. So isn't that what we do over November? But it is Black Friday, I think, this coming Friday. So you'll have plenty of opportunities, or is it the following Friday? Anyway, plenty of opportunities to pick up some bargains going forward. So week to Wednesday, November the 6th, where has the year gone? Same old story. And we're going to look today at those the latest decision from the RBA in regard to interest rates, where interest rates will be over November. Also, we're going to look at not building approvals this week. We're going to look at that next week. Actually, we're going to look at the latest house and unit rent data, which is obviously very relevant out there, particularly for investors. We've had some interesting, not changes, but I guess easing in the cycle of those skyrocketing rents over the last month or two. So we'll see if that's continuing. And as mentioned before, the latest weekend auction results. So no surprise, Melbourne Cup meeting for the Reserve Bank, and hello, rates on hold yet again. As we've discussed here quite consistently, we think that RBA rates will be on hold again and again and again and again for some time. But of course, that depends on the data coming through. We've been keeping our weather eye on inflation, because that's the key, or certainly a key determinant of interest rates. We know we've had sharp falls in inflation lately, but we'll look at what the Reserve Bank says about that. But rates on hold yet again. It is the 8th consecutive decision by the Reserve Bank with rates on hold. And despite all those rate rises we've had before rates were put on hold over a lengthy period, we still have a very strong economy. 13 rate rises we've had since May 2022, but those rate rises, I guess, thankfully have stopped now. Although, there's still potential if things start to move in the wrong direction, that there may be another shift upwards, but less likely now given where inflation is. But jobless rate remains low, just over 4%. That's a great result. Jobs are surging. We've created hundreds of thousands of new jobs over the past year. Even the unemployment rate is falling, and we have a record high participation rate, which measures the level of the workforce in terms of the potential workforce. So we're sort of operating at our maximum levels now in terms of the labour that we have at our disposal. So that's fantastic. Even in regard to the fact that we've had, such a surge in migration, we still have, we're still providing jobs for all those migrants, and still with a low unemployment rate and a high participation rate. So this is a very strong economy. Really hasn't missed a beat regardless of those high interest rates. It's just kept on keeping on, all those higher interest rates. And the factors point to that. Retail sales are still high. High interest rates haven't affected that. They're still well above where retail sales were and the pre-COVID levels. But of course, we know that we measure the value of retail sales. So when you've got more people in the country, more migrants, that means obviously there's more spending. So you would expect retail sales to be higher. And of course, inflation means that, you've got to pay more for your retail. So that also puts upward pressure on the value of retail sales. But even in regard to that, we're still higher than where we were a year ago, and we're still massively higher compared to where we were prior to COVID. So good news there. Again, on the economy, we're spending, wages are rising at near record levels still. And it's very much a positive jobs market for most people out there looking for work. So monthly inflation, as I mentioned, is now significantly lower. We reported on that last week. Big falls in monthly headline inflation due to a slashing of electricity prices and also fuel prices over the past year. So that's good news, because that's what the Reserve Bank is looking at. And we'll look at that in regard to the statement in just a sec. So I believe that rates will remain steady in the outlook. Inflation, despite those sharp falls, is still too high. And that's what the Reserve Bank told us in their statement yesterday. So this is the Reserve Bank's statement following their announcement that rates would remain on hold. It said underlying inflation remains too high. Despite those falls, inflation has fallen substantially since the peak in 2022, as I said, due to declines in fuel and electricity prices. Underlying inflation, which they use what's called the trimmed mean and as their measure, and that takes out the volatile elements, seasonal elements such as fuel and food, out of the headline rate. So they look at the underlying inflation rate as measured by the trimmed mean. So that's the average, but adjusted for volatile elements, is still 3.5% over the year to the September quarter. and the Reserve Bank is measuring the quarterly data, not the monthly data, which we discussed last week. So it's got to wait, I guess, 3 months for that quarterly data to be able to determine, its position on interest rates. And it's still at 3.5%, some way from the 2.5% target. So the Reserve Bank has a target of 2.5%. Well, that's the midpoint of the target, which is 2 to 3%. It's still some way from that target, and this is the key in their statement, which we obviously want to know where interest rates are heading. The banks have all changed their forecasts. A big surprise, in regard to where they think interest rates will be. It's sort of up and down like a yo-yo, bank forecasts, not just for interest rates, but other factors such as the housing market and house prices. But that's another story. But Reserve Bank, and I've underlined this, does not see inflation returning sustainably to the midpoint of the target until 2026. So, that's when it reckons it's going to be in a position to talk about cutting interest rates, is 2026. Now, that's saying all things are equal. But of course, again, these forecasts can alter. And if we do get another significant shift downwards in the the December quarter inflation rate, which is due to come out at the end of January, if we get a big shift downwards into the target range, which is 2.5%, then the following quarter, which of course is the March quarter, and that will come out at the end of April, if it again is a low rate, then it just might start to put pressure on the Reserve Bank to cut rates. They're really playing the long game here, and I think they're going to wait for a few more quarters. But if we continue to see lower, particularly fuel costs, which are important, lower electricity prices, and we move into that midpoint range, I think we need at the very least to be sustainable within their 2 quarters of within the range for the Reserve Bank to think about an interest rate cut. So I think completely logically, that would be the earliest that the Reserve Bank would move downwards on interest rates, but they're still talking on the current trends 2026. So it's well advised to be aware of that. That's what the Reserve Bank is saying, that they don't reckon we're going to get within the target range for inflation until 2026. But the other point is that it still says that they need to have sufficiently restrictive interest rate settings, which means high, which they believe it is now, to restrict inflation until they're confident that they have moved within that target range. So, they want to be confident, and I think that means more than 2 quarters. But the other thing they did say, which I didn't put in here, is that they're still not ruling anything in or out. So if we do get a reverse happening, if inflation starts to pick up, as an example, through higher fuel costs, particularly, and we don't know what's happening in the Middle East, although it's looking a little better over there in terms of the impact on oil prices, which have fallen away again. But if that reverses and oil prices start to rise, that will work its way into inflation and maybe activate over a longer period of time higher interest rates. So they're not ruling anything in or out, and that's the scenario. And at the moment, they're talking about quite conservatively, I think, 2026. But we're saying here that if the trends continue, maybe the live decision for lower interest rates could come about in the May meeting of the Reserve Bank. But we really have to see a continued significant improvement in inflation for that to happen. And the Reserve Bank's tone is quite conservative in terms of waiting for a sustainable period with the inflation rate in the target range. So that's informing you all about the outlook for interest rates. I think it's important because we get a lot of nonsense that's reported about where interest rates are going up, down, sideways from almost day to day. But this is the position of the Reserve Bank, and I think it's quite clear going forward. So that's our target. Not our target, there's our cycle. You can see there that it's flattened out now after all those rises that we did have. But we're still below where we were back in September 2011, where we saw the peak of the previous cycle. So, we're still higher than we were then. We're lower than we were then, way back at the peak of that mining boom. So that's the latest RBA data. I think that's pretty interesting and obviously relevant to the housing market in relation to what's happening with interest rates. So the latest home rental market data shows that home rental markets continue to ease. House rents were steady, but unit rents fell over October generally. But vacancy rates still remain quite tight in most of the capitals for houses. But unit vacancy rates are higher, as we typically see, but they're still pretty tight. So even though our capital city rental markets have clearly improved recently for tenants with lower or flat rental growth, so we're not going through those crazy rental growth periods we had a year or so ago when we were getting up to 20 and more % annual growth in rents. That's flattened out. A lot of that is because people just can't afford to keep paying, big numbers for their rents. Affordability barriers are happening there, but it's still a very tight market for tenants. There's still a lot of competition for available properties out there, but at least they're not facing the same strength in terms of, or barriers in terms of high rents or rent increases. Rents are still high, but we're not seeing those increases coming through as much. And I think that's an affordability factor because incomes just haven't kept up with the rate of growth of rents. But I think as incomes grow, if demand remains ahead of supply, which is likely in most markets, we will start to see rental growth increasing again, because certainly we still have those low clearance rates. So let's have a look at the data. These are for houses. Sydney's rents have been quite steady for houses over recent months at around $800 a week, which is the highest of all the capital cities. Melbourne was also steady, and Hobart was steady. The mover, no surprise, Perth continues to be the top performer in most housing market metrics. House rents up by 1.5% over the month. The Canberra was up by 0.7%. We had, however, house rents in Adelaide down by 0.8%, and volatile Darwin was also down by 0.3%. If we look at the annual results there, they're looking a little bit more palatable for tenants. Still high, but at least we don't have any double-figure annual growth numbers there anymore. But still strong in Perth, up by 8.9% over the year. Sydney house rents up 6.7%, and everywhere is up over the past year, with Hobart the underperformer up by 0.9%. And really the essence of all of that is the vacancy rates. Vacancy rates are still just under or just above 1%, which is very low, very tight rental markets continuing when we understand that 2% is the balance point between demand and supply, where typically around about 2% you see flat rental growth through the cycle, of course. And at higher than that, you get lower rental growth. Lower than that, you get higher rental growth. So still very tight rental markets on the in terms of vacancy rates. So if we look at units, this is where we had sort of weaker outcomes in terms of rental growth. Most of the capitals recorded lower rents for units over the month. Sydney down 1.8%, Melbourne down 2.6%. Adelaide down 1.5%, but Perth continuing strength in that Perth rental market for units, up by 1.6%, and volatile Darwin, the leader, up by 2.2%. Hobart, Canberra were flat over the month. So obviously weaker conditions there overall in the unit rental market. And you can see similarly that the annual growth isn't as strong. It's still reasonably strong. Perth up 12.7%. in terms of rents for units over the past year. Sydney's actually down 2.5% for rental growth for units over the past year. So a little bit of better news there for Sydney, prospective Sydney unit or for tenants in the Sydney unit market. And vacancy rates, again, as I said, are higher generally for units than houses. You can see that still pretty reasonable results in terms of the outlook for landlords looking for competition for their properties. But we have a few there over 2%. Melbourne, a vacancy rate over 2% for units, and Darwin and Canberra also over 2%. So still tight rental markets, a little bit of relief there for in terms of rent growth for both houses and units. and perhaps a little bit less demand and more supply in some of the capital cities for units. But we've come through a very, very strong, in fact, an unprecedented period of strength in our rental markets in terms of way too much demand and not enough supply, which has pushed rents up through the roof, vacancy rates at record low levels. We're now coming to the end of that particular steep cycle, but it's still very much overall rental markets are in favour of landlords, and we still need more supply at the end of the day, to get a more longer term balance occurring. So, if you're looking for a copy of the My Housing Market October 2024 rent report, you can take a picture or scan with your phones that QR code, and it will take you to the full report. So get on to that one. Okay, latest weekly auction results. So over the week up to this weekend, which was in Melbourne, a holiday weekend because they have the Melbourne Cup Day holiday. A lot of people take the Monday off, a lot of people take the Friday off. So obviously it was a distracted weekend in that Melbourne market, which does provide most of the auction listings typically. And that followed a big weekend the previous weekend. So it's it follows the Melbourne Cup Super Saturday. So Melbourne listings were particularly well down. So the overall numbers, that pushed the overall numbers down. But other capital cities actually recorded higher listing numbers over the week compared to the previous week. And that's part of what I was discussing, where we see more supply in the latter part of the spring selling season, particularly in our auction markets, for those reasons I explained, and lower clearance rates. And that's what we saw over the past week. Again, the week ending last Saturday, that clearance rates continued to ease with those higher listing numbers. And as I said, that's what we typically look forward to, or typically experience over the last period of the spring selling season. So Sydney, these are the weekly numbers here we're using now. Significant numbers there, 1,400 auctions, up from the previous week, 47% clearance rate, 64% clearance rate, which was similar to the week before. But we're well down on Sydney's 70% plus that we had through most of spring, or we've had really through most of the past year. Melbourne's holding firm. It was a quieter weekend, obviously, or quieter week, 603 auctions versus 1,782. But clearance rate was a little bit higher, as I said, it was a quieter weekend, so we need to see the full results next week to see if those mid-60s is going to hold up. Brisbane, again, a bigger weekend in Brisbane. Brisbane clearance rates have really started to work downwards. Still a strong market there, Brisbane, and as we say every week, Brisbane is a little bit atypical in terms of their auction markets. It's a different culture up there in terms of auctions, but certainly there's some of the heat has come out of that Brisbane auction market. Similarly, in Adelaide, it had a bigger week for auctions. As I said, most of our capitals, with the exception of Melbourne, well, all of them except for the exception of Melbourne, had bigger weekends for auctions, and just putting some downward pressure, or bigger week for auctions, downward pressure on clearance rates. So Adelaide, 68%. We were getting a lengthy period there where Adelaide every week was recording 80% plus clearance rates. It's sort of ended its extraordinary run, but and tracking now in the mid to high 60s. And Canberra just down, a little bit up and down in Canberra. We've been looking for a revival in that Canberra market. It really hasn't had a consistent revival, and it was back down again over the past week. So I'm just looking at the trends. As I said, Sydney's starting to ease, and we can see there those, as I said, as the spring selling season advances, we see lower clearance rates typically. Melbourne has held up, but it was a holiday week last week, so we need to wait and see what the next week's results are to see if that's more to get a more consistent look or feel for the market, or a more accurate feel for the market. As I mentioned, Brisbane's been falling away over the past, certainly over the past week, but also over the past month or so. Similarly, Adelaide and Canberra was teasing us a bit in terms of another potential revival, but that hasn't occurred. If you want to see those weekend and weekly auction results, you can go to my LinkedIn site, Doc Andrew Wilson at LinkedIn, and the headline results are reported every Saturday around about 6:30, and the full national report on Sundays at my LinkedIn site, and that includes the top 10 sales for the week of every capital city and the regional breakdowns for Melbourne and Sydney. And if you've missed that latest national weekend weekly auction market report, there again is our QR code, and you can get a copy of that by scanning that code. You get a PDF copy. So we now move forward to the final slides of the Wilson Weekly. And as usual, we'll give a plug for the My Housing Markets data app, brought to you in conjunction with our friends at Infinity. If you want to get and there's a link to the app. If you want to get full access to the app, you need to go through Infinity because it's password protected. Yes, and it's well worth getting hold of that password because it does give you a daily insight into what's happening in all suburbs in Australia. So any suburb that's got some data, you can actually get an insight into what's happening for both the rental market and the price market. So we've got a screenshot there to give you an example. And as I said, this is real-time data coming through. So you can filter for price or rent. You can filter for the state outside capital city region or the capital city region. We filtered there for Sydney region, capital city region. You can then pick your suburb. We picked Blacktown. You can then filter it for house or unit or townhouse. So you've got 3 choices there. And you can also filter it for the number of beds as well. So how good is that? And that includes all beds, but also you can filter it down for the number of beds. So we've got a result there for Blacktown. It's not just the median price, and these are asking prices. So you understand what people are asking right here and now for their property. So it does give you a real feel for what's happening in the market overall. So it's got a median there of 1.3 in Blacktown, a low of 1.1 and a high of 1.55. So just get the median, you get the high and the low, so you know the range of what's asking in each suburb. So that's very valuable insight if you're buying or selling, or you're just interested in a particular suburb. Also, the number of listings that are currently there for properties for sale. So we have exactly the same thing for the rental market, which we've used Blacktown again, and we've used a 1-bedroom unit as an example for the rental market. So get a hold of that one, but go through Infinity. And as a new addition to our wonderful app, we can also now show you what the yields are. So this is especially interesting for investors. So that shows return on investment for each suburb. So what we've done here is looked at the top 10 suburbs in each of the major regions. So it's either the capital city region or the outside capital city region. And we filter it. It's a minimum of 10 sales and 10 listings for both rents and properties for sale. So it's so we don't get volatile results. And this is the top 10 out of Sydney for yields there. The Ultimo one's a little bit high, but that's because it includes, which we can't filter out, student accommodation, which typically has a much higher level of includes student accommodation, which has a much higher yield. But you can see there the interesting Glebe is second to Ultimo with the top yield at 6.9%. So we are going to be updating that again in the next week or two to include actual vacancy rates. So you can also have the suburb vacancy rate. So good news there for investors who are looking for returns, what the suburbs are returning, and this is for all of Australia. And it also shows you the number of properties that are currently for rent or for sale. So you can sort of get a feel if there's a lot more properties for rent than there are for sale, is that a positive? Or if there are a lot more properties for sale than there are for rent, is that a positive? So at the end of the day, it does assist you in making decisions in regard to prospective investment properties. So next week, we will have back to the ABS data, updated to ABS data, September home loans. And we are, at the end of this year, going to say goodbye to the monthly report from the ABS for home loans. They're going to a quarterly report, which is a bit sad. So, because it's a good data set, that home loan data set, but we will be going to a quarterly data set next year. And as I said at the beginning, we weren't going to have this week, but we've pushed it aside to have the rent report. We will have the September home building approvals next week. And as usual, the latest weekend weekly auction results. So if you want a copy of the full report here today, again, there's a QR code that you can scan, and that will give you a PDF copy of today's comprehensive, as usual, report. So that's all from me. I hope you all had a good cup day, or wherever you were in Australia. If you had a bet that you were successful, if you had a bet, if not, well, what the hell. But we look forward again to having a chat next week with the latest data in the housing market, and our weekly podcasts are now coming to a screeching halt over 2024, but there's still plenty of insights to be provided. So cheers to everybody, and we'll catch you all next week.
Thanks, Doc. Appreciate it. I don't think anyone could have had a worse day yesterday with me on the tips, mate. But hopefully someone got a win out there. But,
sorry to hear that, but what can you do?
Thanks for joining.
Next week you'll be a winner, right?
Yeah, next year. Thanks for joining in. Thanks again, Doc. Valuable insights, and look forward to seeing you next week, mate. Appreciate it.